question I have for you, and I'll start with you, Evan, on that side. Where are we with APIs? What's going on? Is this a bit more hype? Where are we in the process, and how should we think about it? Just your response.
So when it comes to APIs, I think the promise of speed and instant connectivity is certainly there. We're all excited about that. We'd love to see that rolled out in a much wider landscape. Currently, I think the extent of API connectivity is still in development, is how I would phrase it. But when you're looking at that compared to SFTP, just the speed alone is a tremendous advantage. So certainly making progress, still some ways to go, but I think the promise is certainly there.
Great. Joe, would you jump in on this one?
Yeah. So I think the concept of APIs, obviously, we all know is not new. APIs have been around for 40 some years now. But where APIs have become an increasingly important part of our tech stack has been the speed, which you referenced, the availability of real-time data. But also, I think the number of use cases and business models that APIs have enabled us to provide our customers. And I think that's really the premise of and the promise of APIs. And I would say, I think we think of APIs as just fundamental to how we interact with our FinTech partners, the way we interact with, just technology assets internally at the bank to deliver capabilities to our customers, whether it's on payments, whether it's data and reporting. I would say, has the organization and, kind of when I say organization, I think a banking industry evolved, I would say quite significantly. I'd say computing power has made APIs just much more relevant in today's discussion. And so it is definitely kind of a trend that we're incredibly bullish on. And I think it underpins what we think is our kind of tech strategy and business strategy. So it's moved from like just a technology conversation to how can APIs enable new capabilities, and hence it's moved sort of to that business conversation. So very, very important asset for us as we think about sort of the future of Treasury and what it can create for customers.
Yeah, very good. Mitch, any of your comments?
Yeah, I think from my perspective, a lot of our clients are enjoying the benefits of fully integrated APIs into their systems. So in some of the benefits that they're seeing from that are, increased capital efficiency because they're able to consume the API information from, their top 5 banks, really covering 90+% of their global cash, to be very efficient with that information while those other banks are still kind of working through building their technology stack. So what we've seen is a lot of the major banks have fully capable, APIs from a treasury perspective, and integrating that information for our corporate clients really provides them with the information that they've been lacking over the last 10, 15 years when they're solely reliant upon files and information being pushed to them instead of really having that information on demand and pulling it into their system for their use.
So where are we in the process? Are we 20% of the way there? 50%? I know we're not more than 70%. Any views?
I think we're at the tip of the iceberg. I think when we clearly right now we're focusing on APIs as related to banking APIs. So the ability to get that information more quickly, as has been said, is one piece of it. But and I say we're at the tip of the iceberg. The maturity of APIs from each of the different banks it varies quite wildly. But I think where the value has been, our customers have seen, and where we've connected is really the ability to get real-time visibility to those transactions. But there's so much more we can do, and the opportunity that exists to do more. And what I mean by that is, in my role, I get to really sort of dream up what does this mean? When you say real time, well, that changes the landscape of things. So if everything's happening in real time, when does the day actually end? Right? What does prior day reconciliation even mean anymore? And so when you couple together potentially the value and speed of APIs with other technologies like machine learning, like business intelligence tools and data lakes, imagine that you're feeding not only the real-time data, but you have a huge amount of history, because that's also available through APIs, is to be able to pull in information of historical data
if I could answer your question on kind of how ubiquitous it's become, I'd look at it from two lenses. One is there are APIs internally that the bank's using, right, for kind of internal systems to talk to one another. And I'd say that level of maturity is probably a lot higher than what we're seeing in the external API environment. So I'd say if I kind of take the lens of there's a lot more internal, because there's just the safety and the soundness of the data. And so when we have different kind of middle office, back office systems, exposing information to customer facing applications, those APIs are becoming a lot more predominant. So we're re-architecting our platforms in a microservices and API based fashion. That's where most of the technology investments continue to go to. But you think about customer facing APIs and kind of what we're exposing externally to partners, I think there's a little bit, there's still more maturity that can happen in that space. And I'd say kind of just in order of magnitude, that's a lot less than what we're seeing internally.
So is all of this just a discussion between banks and fintechs? Because most of the use of APIs is between these players. What should a corporate or commercial customer think about with regards to APIs? Is it just that's neat that you guys are doing that, or is there something else?
I mean, I think from my perspective, from the corporate side of things, the true driver there is some kind of pain point. So whether that be, as we talked about, the reconciliation on a prior day basis, not being fast enough to recognize fraud, having payments on a Friday afternoon that don't make it to the bank, and you've got funding lapses that cause overdrafts and things like that, because in a traditional file-based world, you're waiting on files to come back, and these kind of interfaces are not reliable. Whereas when you go to, an API-based, request-based system, these kind of interfaces, really they're immediate. So it's a handshake that, immediately as soon as you send a payment, as soon as you request for a transaction, whether that handshake was successful. So it's not a waiting game. It's not a guessing game anymore. It's very, very definitive to where you're putting the power in the hands of the corporate to be able to request data from their partners whenever they want. So I think it's from what we've seen, it's really some sort of pain point that normally drives the decision to try to look for something that's, more reliable, more timely.
I would agree. Sorry, just to add to that, I think it's the APIs between banks and fintechs are for the sole purpose of providing functionality to customers, our corporate treasurers, CFOs. And so, it is kind of how do you create a value proposition that is real time for the benefit of the corporate treasurer whose job continues to evolve, and the way that they consume data continues to evolve. And so whether it is kind of real time cash forecasting capabilities, global cash positioning, et cetera, we think that the power of APIs and this partnership between fintechs and banks is really empowering that view for the benefit of our customers, which are the treasurers and the CFOs at our client organizations.
Great. Let's shift over to our second topic, which is artificial intelligence and machine learning. And Mitch, I'll start with you, and then Michael, I'll bring you in on this as well. So first, give us a treasury practitioner's definition of machine learning, and let us know where things are, and then we'll get into some use cases. So why don't you begin us?
Yeah, so from a machine learning perspective, it's really taking the data that's available and then really acting upon it in a more informed manner based off of not just a single transaction, but based off of historical information that's similar to that information. So taking kind of all key data points from a single piece of data and then joining that with everything that's available, whether that be inside of TMS, inside of an ERP, to really make truly wholly informed decisions based off of that information. Kind of a key use case for that is forecasting. So you think about systems in forecasting where accounts payable, accounts receivable only exist for a finite period of time. You've only got invoices for 30, 60, 90 days. Layering in AI, machine learning into that allows you to extrapolate that out.
So machine learning is this pattern detection, and your use case example was forecasting to see what's occurred. Michael, what's your take on this, and do you have another use case?
I guess if you think about it from a technology perspective, it's the ability to be able to not explicitly program a program, but have the program actually learn in order for it to work, right? So that's where, as Mitch said, the historical data comes into play. So we actually at ION about I think it was maybe 3-4 years ago, we partnered with a university in Europe and collaborated on this research project to really understand what are the most applicable use cases of machine learning in Treasury. No surprise that the top one was cash forecasting. And that one, I say no surprise because this is exactly what machine learning is meant to do, is be able to make a prediction about something with a set of data. And the other thing is it solves a pain point, right? So as we were talking about on APIs, it does solve a major pain point. The other 4 top use cases were around matching, so reconciliation, then around categorization of transactions, so cash tagging. Then we've got our 4th, which is around recommendation. So this would be like an investment recommendation. Where should I invest my excess cash? And then the last one was around anomaly detection.
So I'll invite the others to jump in as well. But if we look at APIs as perhaps a coming replacement or replacement over time of older legacy connections like SFTP, whatever that time frame is machine learning going to be replacing what people are doing as well? If so, does this represent a huge opportunity, or does this mean there's going to be less jobs in Treasury and other areas of finance? It's certainly impacting the accounting world and the auditing world very heavily, machine learning. What does this mean for how we should approach it, both from the fear factor as well as from the opportunity factor?
Anytime there's a new technology or a breakthrough in sort of industry standards, we can certainly look at it from a fear or a optimistic perspective. I'm a big believer that it's really an opportunity for the future. So despite the fact that certain jobs may be outsourced or wound down or replaced due to the innovations in machine learning and AI, I think there's equally a huge forefront for new opportunities to create those products, to innovate in that space. So while it may be a different skill set, within the Treasury arena, there's a ripe opportunity for tremendous growth within that specialization.
Great. So there's hope. There's still going to be jobs. Joe, do you agree with that?
I completely agree with that. This is not a new concept. in human history, right, every kind of 100 years, there's a technology that comes around and really changes the way we think about work. And so, if you think about the Industrial Revolution and, what that did to the workforce and a lot of the jobs that existed today didn't exist 30 years ago. And the jobs that are going to exist 30 years from now don't exist today. And I think that's just part of evolution. And so I do agree that, reskilling talent is going to be incredibly important. I think the use cases for artificial intelligence are only going to continue to increase as computing power and the availability of data becomes a lot more prevalent. And I think that's a good thing because the role of a corporate treasurer will change from someone who is manually pulling together information from a few different systems and banking applications to how am I leveraging all of that data to create insightful, meaningful recommendations to move my business forward. So, you just take the example of machine learning and artificial intelligence and what that means to, a CFO or a treasurer. That job's going to change. And I think it's going to change for the better, allowing, them to become strategic decision makers on growth of the business. And I think that's kind of a really important aspect where I see these technologies continuing to drive more value.
Yeah, if I could jump in real quickly, I totally agree with what Joe is saying. The work looks different, but I think we have a long ways to go before we get there. Usually the technology it comes well before mass adoption. And so there's a reliable treasury researching firm that believes that the use of AI is going to triple over the next 2 years, and that came from Strategic Treasurer. So throw some research back at you. But I think that
I'm not going to go easy on you during the speed rounds for that.
But I think that really does say a lot. And I think what we're seeing of adoption of AI is there's a tremendous amount of interest, but equally a tremendous amount of hesitation. And so what we are working with our customers on and suggesting is really, when it comes to forecasting, run your current forecasting process in parallel with the machine. Compare it. I think there's a lack of trust in the machine because you don't necessarily have the visibility and transparency of what is the machine thinking that goes behind what is the person who might be manually providing the forecast. And I think it's going to take some time to get over that.
We're going to move to our first speed round, and let's just go over the rules for the panelists on this hot seat. You have 15 seconds to respond. We want a real answer, not a it's both all the time. We want you to take a position and explain the reason for it. Okay, we're going to begin starting with Mitch going down, and then the second question we'll reverse the order. We have a few of these, so you guys pay attention. So first is, what is more important and why? Machine learning or RPA? Go.
I think machine learning is more important just because it allows you to grow and learn without the need to really program a robotic process. It's really independent and learns and gets better over time all on its own instead of having to have somebody actually program the bot to do a repetitive task.
Great. Joe?
I think right now RPA, because RPA is kind of solving real world problems and taking that manual repetitive process out of the workforce and allowing them to focus on more intelligent decision making.
So near term and far term perspectives. Michael, can you break the tie?
I am going to go with RPA short term, but machine learning really is the future.
That's a both question answer.
So I'm going with machine learning, but it is the future. I think, as Joe said, RPA is today, but if you're investing for the future, machine learning goes well beyond the repetitive tasks.
Evan, your turn.
Yeah, and I would also go with machine learning there. I feel like that's with the amount of data that's available, it just really sets a strong foundation for the future of intelligent treasury. So machine learning.
All right, so there you have it. Machine learning by a nose. There's some use for RPA is what we hear. So Evan, we're going to start with you and reverse the order. SFTP, Secure File Transfer Protocol, or APIs? Go.
I would say APIs simply because of the speed that's available for today's world. I don't want to give you a both answer. We obviously have to have a balance between the two. But if I were to say where the future's heading, APIs is where my bet would be.
Okay, Michael?
No balance coming from me. APIs, for sure. One caveat is just the maturity. Whatever API you're thinking, just make sure that what information you need is there and can replace whatever you rely on.
Appreciate the titanium spine on that one. That's great. Joe, how about you?
I agree. I think APIs, they level the playing field in so many ways between organizations, and they just create a lot of new value in the kind of end-to-end process. So there's no doubt that the speed, efficiency, the data that travels with the APIs, I think, is incredibly important. So that's definitely the future.
Okay, will you dare to set a different response? Go ahead, Mitch.
I dare not. So I'll have to go with APIs. I just think about it from a consumer perspective. If I can pull, my very uncomplicated total capital portfolio, very easily at the palm of my hand, I think it's something that is well past due for corporate. So I think it's definitely APIs.
That one wasn't close at all. Even though the vast majority of transfers and data is by SFTP, nobody took the realistic position on that. So thanks for your straight up answers. Mitch, we're going to start with you. We're going to go back. What do treasurers need to understand about SaaS, software as a service? Go.
I think from a SaaS perspective, you just have to look at it from a data control perspective because you're putting your data out there outside of your network. So just understanding, the security of that system, what that system brings versus something that you were hosting in-house.
Joe?
I agree. I think data security is incredibly important. I also think about just being aware of the infrastructure that sits behind the application's ability to scale up, scale down. I think these are things that sometimes aren't as front and center for the corporate treasurer. But I think as you think about sort of your holistic implementation strategy, I think it is important to look at not just the security and soundness, but also kind of the underlying infrastructure that supports it.
Michael?
Security tops the list for sure. It's no longer just the IT's problem. Treasury needs to be informed. But when it comes to SaaS, in addition to security, really just the benefits, the opportunity are important to understand as well. So you're constantly potentially getting upgraded and new. That you just want to understand when that's happening, and make sure that you can manage your business.
I'm going to shift, and Evan, I'm going to throw you a curveball because I'm going to go back to a question I didn't cover. This is the either or question. What is more important and why? Efficiency or analytics? Go.
Efficiency, simply to make sure that we're getting the job done on time in a reliable, consistent fashion. And I'm going to avoid the bolt there, Craig, just to save you the...
All right. Michael?
I'm going to upset you, but I'm going to say it's not an either or, but it's a sequence. I would say if you strive for efficiency, you get your efficiency, then you get the analytics. Otherwise, you do it the other way around. You're going to have a bunch of analytics that isn't going to be looked at or used.
And Joe?
I was going to have actually the exact opposite answer as my colleague here. I think analytics, like strong analytics, I think drives efficiency in decision making. And so I think, having a robust data infrastructure, having robust analytics on top of that data infrastructure in many ways creates efficiencies for day-to-day decision making. And I think that's incredibly important for someone who is looking at vast amounts of data and trying to make decisions as close to real time as possible.
And Mitch?
So I'll have to go with efficiency. I think from an efficiency perspective, that's kind of the framework and the foundation really for your analytics. So you've got to have efficient processes in place before you kind of layer in the analytics on top of that.
All right, we'll go back as well with platform as a service. So things like Azure, AWS, running things in the cloud where you can move and transport it. What do treasurers need to understand about platform as a service as opposed to software as a service? Mitch, if you'll begin.
I mean, I think the speed associated with those offerings, when you think about the AWS and Azures of the world, really allows and enables some of these real time treasury and systems to exist. So that's kind of the big thing, I think, from a difference between having an Azure cloud versus a SaaS system.
Okay, Joe?
I think it's about the security. Even kind of as you think about making a decision on whether it's sort of an on-prem or an in-cloud solution, I think making sure that the security and the safety and the soundness of your data, I think, is at least from a banking perspective, that is probably the single most important area of focus for us. And I think as we recommend, what corporate treasurer should be thinking about, I do think it is looking at info security and cybersecurity practices, just given the environment that we're in and the amount of ongoing challenges that we're continuing to see in this space.
The banker talks about security a lot. We'll have to get you on a podcast. Michael?
Once again, I agree with security as the top thing, but I would say platform as a service is a really nice hybrid between SaaS and the on-prem. So if you are not comfortable with the full SaaS, true SaaS solution, but you also don't have, let's say, the IT organization in-house to be able to support on-prem and your needs, the platform as a service is a fantastic option.
All right, Evan.
Yeah, and I would say security is always paramount, without question. And to echo Michael, from an IT perspective, I think a platform as a service just offers more easier, extensible access to a richer ecosystem for an organization. So,
all of those questions were answered properly. Excellent. So let's start with you and Evan, and we'll begin with why should treasurers care about business intelligence, and how should they think about it? Go.
Well, I think first and foremost, from a business intelligence perspective, it allows for more actionable decision making. And to care about that, I think to have the right systems in place where you have that business intelligence, you have the information to act in a timely manner, really just puts you at an advantage from managing your treasury operation.
Michael?
I'd agree. I mean, I think the intelligence is power. I mean, I think that holds true here in Treasury as well. In our own organization, outside of Treasury, we constantly have more and more dashboards that we're creating just to manage the business. So many dashboards now that they're duplicating dashboards. So I think what's great about all of this is that people love intelligence. They're craving data. and it's becoming infectious. And being able to manage that in a smart way is going to be the next challenge we have to face.
I mean, it's hard to say anything different because everything that my panelists are covering, it's exactly accurate. I would say that at the end of the day, what is hard is to create sort of what we call normalized data, right? You take data from so many different applications and create kind of one pertinent data lake from which you can derive kind of your real-time data and insights. That's hard. And but the value and the investment in doing that, I think, pays dividends kind of every day, down the road across all of the Treasury office's decision making process. But so I think kind of pertinent investment in the right applications to create the right reporting, and whether it's kind of real time dashboards, et cetera, or just insights as a service become, I think, incredibly important for the role of the treasurer. So, I agree with everything everyone said.
All right, let me jump in and add to a question to that and break the speed round a bit. Is business intelligence more valuable for more robust dashboarding and seeing things from different ways, or is its value more tied up in the ability to self-service and self-discover? And you can put weightings on those. You can put 55, 45. Go ahead. And that's what you're going to get, Mitch, too. So
yeah, I think the ability to, at the end of the day, the data is all about the decision-making process, right? And so I think the ability to quickly reconcile that information and make those decisions in a self-serve way, to me, is, I think, where the value sort of sits. And so if you think about, what's happening in kind of the consumer space, right? You're able to, a lot of banks and fintech firms are taking your data and then they're giving you insights based on your transaction behavior. That's no different what I think, is happening kind of in the corporate treasury world as well. So I think I would weight the ability to make those, self-service, real-time insights, probably put a premium on that aspect.
Okay, Mitch?
Yeah, I'm going to tie those two together. I feel like that the point of the dashboards, as I work with our product team, is always to allow self-service. So when I build a dashboard, it's not with the purpose of having a pretty picture. It's with the purpose of allowing those users to use that dashboard and really make key decisions. So one of the big selling points of intelligent data and dashboards is from a treasury perspective, you can really retain your top talent at that point, because you're not having to go and manually pull things from multiple different places. Your top talent can make decisions based off of really informed quality data in a single kind of interface, so they're not having to kind of randomize their day.
I'll maybe add one more thing I forgot to say is it's going to be really expensive to find enough data scientists to create custom queries. So the more self-service you can create your dashboards, the better your economics, because it is a very hard skill set to find in the industry. And so back to your point, democratizing the intelligence and the decision-making process through a self-serve fashion, I just think is a more prudent, economically prudent way to go.
Okay, we're going to exit the speed round and move into a topic called speed in treasury. And we're going to go Michael, Mitch, and Joe on this one. So there's a lot of talk about APIs. We had conversations about that. It speeds things up. How much is speed overblown? How much is speed necessary? What are the preconditions? We talk about faster payments, but not everyone's concerned just about speed. Speed may be a component. So what are the preconditions for speed that are essential?
It mentioned this earlier, in my example of what does prior day mean anymore when you're living in a real time world, and so I think with speed and I'm going to say something I guess probably a bit controversial here. One question I constantly ask myself is how can you run treasury with just one person? Right. And so that's not meant to take people out of treasury. That is actually the exact opposite point of the question. But it does make you sort of think. We don't have customers come to us saying, my treasury team is doubling. They come to us saying my treasury team is shrinking, or I need to provide my business with additional support. Right. They're looking for more. And with this additional focus on liquidity, this becomes more of a challenge. So people are looking for automation. And so when we think about the question in that context, I think APIs, and we think about how does it enable automation, and we think about coupling these technologies. I talked about APIs together with machine learning to automate the reconciliation process, to automate your visibility to cash. When you think about that, what is left for the cash analyst to do? And so I think that the question when it comes to speed is, if I can have this data at real time, I can process the data, I then really am left with just what are the exceptions? What happened that I wasn't expecting to happen? And that's where people should spend their time, is trying to figure out, well, what do I do here? And then kind of going back to, well, that then leaves more time to actually analyze and look at the data and make better decisions through analytics. So I think everything just builds on the value, just builds on each other. And I think if we think about each of these technologies, we're talking about APIs specifically as a mutually exclusive opportunity, we really significantly lessen the value.
I think when you think about the speed, sometimes you get into organizations where that's not a huge selling point and that it's not a huge benefit. But when you think about the other kind of pieces of the puzzle that come along with that speed, the reliability, the security, to where you're not, doing those things like writing out files and things like that give you a momentary point of fraud sitting on your network. So I think from our corporate perspective, there's always something different that can be benefited from the APIs. If somebody's running a tight ship, in a lot of cases, the speed can be paramount because they're able to always have that fully accurate information. But for other groups, it's really the security aspect of it. It's a point-to-point communication that's much more secure than if you're writing a file out and sending it across. So I think when it comes to APIs and speed, yes, they're faster, but they're also more reliable and more secure.
Defects matter more than speed, and reliability matters more than speed. Does speed matter?
I think it matters in the context of what the client's trying to do. So for example, if you're a property casualty insurance company and you need to get a payment to your customer in real time because they have, their house burned down, I think speed's incredibly important because it is differentiating, right, your value proposition and serving your customer at the time of need. If you are a gig economy employer, being able to pay your workforce quickly could be a differentiator, and it could allow you to retain a workforce that has very, very high rates of attrition. If you are sending a $10 million payment to your supplier, you may want to, be 100% sure that is the right account number and, you're sending it to the right company or to the right individual. And maybe speed's not that important. Maybe kind of the assurity of the payment is probably a lot more relevant. So I think it depends on the use case. And how do you leverage speed for the benefit of your business model to create either a differentiated customer experience or to, make sure that you're meeting kind of your vendor relationships, et cetera. So that's kind of how I think about speed.
Can any of you think of examples where things are moving slower, that things don't inexorably move towards faster, whether speed is the driving factor or not? Can you think of anything in finance, in treasury, and banking where things are slowing down?
I guess slowing down for a purpose, right? So perhaps a payment slows down because you have anomaly detection and it detects an anomaly, or it slows down because it has been screened for sanctions and a sanctioned party pops up. So you're slowing it down for a benefit, right? So you're being more cautious on those high value payments.
If speed has reason and drive in conjunction with other areas, what does the corporate treasurer? You're talking to corporate treasurers, technology directors at large corporations, mid-sized corporations. How do they need to think about the implications of speed matters, usually in conjunction with something else, but what do they need to do to prepare themselves for faster?
From my perspective, to really prepare for the faster, you've got to first look at your infrastructure from a corporate perspective. So what are my systems that need to really consume this faster data that I'm looking at? Is it a single system? Is it a group of systems? Do I need to then look at, potentially a data lake to make it available to numerous different locations and be able to run, various types of reporting and things like that off of it? So a lot of times it's an inward looking look at your system infrastructure, and then secondary, really looking at your IT allocation, because from an API perspective, if you're talking about real time, a lot of these specifications you get from banks are thousands of pages. So do I have the talent internally to build this once I decide, yes, I need real time, or do I need to look out and try to find somebody that knows how to do it to ultimately bring that information in?
That sort of sounded like, how do I identify the slowest links in my process in one summary? Anybody else want to add on that?
Yeah, I would just say before moving at a accelerated pace, I think it's always good to make sure that your core operations are sound. You have a good grasp on how things are running, and then you can pick up the pace. So I would never advise anyone to prioritize speed if they don't have accuracy, security, analytics, the right sort of precursors to that very important next step.
Yeah, so that brings us into the next section, and I'll start with you again, Evan. We're going to talk about big data and analytics. There's a lot of talk and discussion about how rapidly data is exploding and growing. Most estimate that it doubles every 2 years, 40 to 60% growth per annual measurement time. So it's growing really rapid. How do we control that? How do we manage that? And big data and analytics tends to be part of the solution set that they're talking about. So many are excited about it. What is the opportunity for Treasury, for technology firms, for banks, for professional Treasury people in large, medium-sized, and small companies? If you'd begin.
So from a big data perspective, I think first and foremost, for organizations to be able to capture their data, to warehouse it, to organize it appropriately, and then once they have those systems in place, to build on top of that the right algorithms, machine learning, AI, that helps them utilize that warehouse of data. So if I'm looking at it from a corporate perspective, I really think there's two levels. Securely warehousing the data itself, and then utilizing that warehouse of data through intelligent treasury mechanisms.
Okay, Joe, would you like to weigh in on this?
I started my career as a data scientist, so I could talk about this for a long time. But what I would say is a couple of things. One is, to me, I think there's so many applications that you could leverage data and analytics for. I think you have to, in many organizations, really prioritize what you're trying to do, because the more information you have, the more applications there will be. And so you put a lot of priorities on, again, a team that is hard to retain and hard to find talent for, first of all. So I think kind of this internal prioritization process of how are we going to, as an organization, leverage the data, and what are some of the things that are most important for us, to me, I think is a very prudent way for any organization to think about, right? It could be for security purposes, for fraud prevention. It could be for personalization and contextualization of your experience, of your products and experiences. It could be what we call kind of the journey mapping of a customer. Kind of how does a customer kind of move from point A to point B in their life cycle. So there are a myriad of ways that organizations should be thinking about leveraging their data. I think a good place to start is kind of what's important for them. How do you leverage that data to differentiate yourself from your competitors, and then how do you kind of use that to provide much more contextual, relevant experiences? Because that's where really as an industry, we're all headed towards, right? And so I think those are some of the considerations that I would think about as I think about what I want to do is I chart my data strategy in my organization.
What's the increase in value of data? If data is growing, everyone should be coming up with a data strategy, is what I heard you say. Banks, fintechs, corporations, how they tie those together. What's the current value of data compared to, let's say treasuries, making sure that they have, they're performing risk management functions, liquidity management functions. data supports those activities, helps them do analysis. So it's not like it's either or. This is not the speed round. You got to pick one or the other. But how is data growing in value? When will it cross the 50% threshold compared to some of these other areas, or has it? And I'll leave that to Joe. You can start. Since you said you're a data scientist, you have to have an answer on that, and others can jump in.
I think again, maybe I'm biased, but I think the data in many ways is what it's all about, to be honest with you. Whether it's payments, whether it's products, whatever it is at the end of the day that, you're trying to do, even if it is calling an Uber and trying to get to the airport, like, it is all about the information. So I'm a big believer that this technology and the ability to process, analyze, derive insights from it is probably the single most important, aspect of what I think, organizations should be thinking about as they chart their strategy for growth. And again, I say this, that I may be completely biased in that, but I do think it's that important. I think the ability to invest in the right solutions, the right kind of infrastructure, platforms, the right people, and then, the ability to kind of create what we call democratization of data and empower, whether it's your credit organization, your risk organization, your fraud, your product, your customer service. I mean, this will really fulfill kind of the needs end to end across your business. I couldn't put enough of a premium on a data-driven organization, because that's really, I think you can really truly differentiate yourself.
If you're biased, I think everyone was nodding with you. So we have a biased panel up here. Anybody else? Any comments on that? Evan?
Joe brings up a great example across departments. Data is really the lifeblood of an organization. I think the market has an awareness now. Big data is enough of a buzzword that we're all familiar with that really being kind of the next wave, and watching that unfold across the organization, I think is very exciting and promising. And that's what I think will position the future for successful treasury departments.
So speed round, and we'll start with Evan. The first one will be, we just heard that data is king, and we've all long believed that cash is king. Is it data is king or cash is king? And we'll move down.
Cash is always king. If you're not able to maintain liquidity, then there's not much promise for the business. But so I'll just leave it there, just to avoid the.
Michael?
I think cash is king. If you don't have the cash, business continuity. Let's go back to the basics. So cash has clearly got to be king, but we build on it with data.
Joe?
I agree. I think cash, well, in the physical sense, probably, hopefully not so much longer, but maybe digital cash will be king, and that's kind of the day and age we're looking forward to. And I think the data to support that will be defining. So yes, you absolutely need the liquidity to implement any of these technology enhancements.
Mitch?
I have to agree. So I think cash is king, but the data really supplements that. So you're able to more efficiently manage your cash and really have your cash work for you better if you've got the better data associated with it. You can kind of work with a slimmer margin.
So perhaps data is still a member of the royal family, but maybe not king, is what we're going on. All right. So we're in our second round. This is a one question speed round. When I said second round, I was referring to speed. So this is an example, and we're going to begin. We're going to begin with you, Mitch, and go across. So what's the best use of technology you've seen with payments or treasury in the past year? And then what's your prediction for the technology change in 5 years? Go, Mitch.
I think over the last year that the best kind of technology, I guess, that I've seen associated with payments is to go back to where we started, kind of the APIs and the tracking associated with the payments. So having definitive knowledge of that your cross-border payment made it to where it's going, I think is something that's been missing for a long time, because those are typically the problem pieces for where when you're making those large value cross-border transactions. So I think having your banks be able to provide that information as far as tracking on those high value transfers that are going around the world, I think that's kind of the biggest piece of kind of the puzzle that's from a payment tracking perspective that's been missing over the last few years. And I think that's only going to get better to be, domestic and international. So we've got that tracking for cross-border. I think over the next, 3 to 5 years, we'll find a way to perform that same level of tracking domestically for those, same kind of wire transfers.
Excellent. Joe?
I think the single biggest, I'd say, important kind of innovation or technology in the last, 12 to 8, or maybe now 2 years since the pandemic started, is digital interfaces, right? If you think about what just the world went through over the last almost 2 years now, the ability to still run your business and be able to do that through, whether it was applying for like a paycheck protection program loan, or it was, driving by your branch and, getting your debit card, delivered to you at your door, which is what TD Bank did, because you were able to order that debit card through your mobile application. Like, to me, I think all of that has been powered by digital interfaces and digital applications. And in many cases, that's kept the lights on for hundreds and thousands of small businesses in the country. And so to me, I think about, the single most profoundly important impact of technology over the last year and a half has been, allowing people to get paid, allowing people to kind of keep their businesses, still up and running. And that wouldn't have been possible with many of the investments that we've made in digital. And to be able to, in many cases, many of the banks overnight stepped up and pivoted to PPP. You think of, could that have been possible 25 years ago or 30 years ago without the investments that organizations are making in digital? And I think probably not. And so, thank God that we had the pandemic in a day and age where technology is incredibly ubiquitous and valuable, because, I can't imagine what businesses and consumers and, the society would have to go to if we had the pandemic, without this ubiquitous kind of digital ecosystem.
Very good. Michael?
We, at the beginning of the pandemic, held a fireside chat with customers and asked them what do they want to talk about, and they wanted to talk about how are they handling offline processes. So we talk about, actually, I don't think the word digitalization has been used in this. This is maybe the first panel of probably all of AFP that hasn't said that yet. But I think it's real. It's accelerating. This is what people want to talk about. And the good thing is, I think the technology is there. It's just a matter of adopting it. And when you think about the best use of technology and how to apply over the next 5 years, I think that there's a lot, if we go outside the commercial banking world, into really thinking about capital structure optimization. So thinking about how companies can be more proactive in financing M&A transactions, financing or refinancing any debt that they have outstanding. Right now, there's no benchmark. There's no place to look to see what are your competitors doing, or not competitors. What are your comparables doing in terms of issuing debt? What rates are they issuing at? What tenors are they issuing at? Really taking hold and optimizing your capital structure to really lower the cost of funding, I think is a huge opportunity. And we're starting to see a couple of use cases over the last year of that being possible, especially at the smaller companies that are probably less well banked from the investment banks.
Thank you. And Evan?
Yeah, and I'll actually use the word, as Michael mentioned, digitalization, I think, is a huge transformation that's occurred recently. And I think really the main benefit of that is having greater visibility across a number of functions within Treasury. So as I look to the future over the next 5 years, if we can look at our current visibility today, I see that just exponentially increasing. So I would say, the digital expansion and the ability to leverage that for decision making has been really instrumental.
So thank you, Evan, and thank you to each of our panelists and for our audience for attending and participating in this session of the FinTech Hotseat. Thank you so much. Let's give a round of applause for them.